Yeah, thank you so much for taking the time to have a chat with me. I've been speaking to lots of people in the finance industry just about
Hmm.
the stuff that they're doing that's good and is, leading to positive impacts and kind of ethical policies, and just talking about some of the options that consumers have that they might not be aware of when it comes to ethical and positive impacts, um, banks and investments and
Yeah,
pensions and that type of thing. Um, so, Whitney, do you want to just start by telling us a little bit about you? Because you've been at Triodos
sure.
for a while now, haven't you? Um,
Yes, I have. That's right. Yeah.
yeah.
So I've been with Triodos Bank for 15 years. So I've come from a kind of mainstream investment banking background, but then I spent a number of years working for a think tank in international development. And then when I came across Triodos Bank, I guess probably about 16 or 17 years ago, it was really just quite a fortuitous encounter, I guess, because it meant that I could go back to working in finance, but really working for an organization with values aligned with mine, where everything that we do is about having a positive impact on people and the planet.
Yeah, amazing. And what have you seen change in the last 15 years when it comes to ethical finance? I mean, I've been working
Yeah.
in ethical and sustainable finance for 8 years, and I've seen
Hmm.
so much change just in the last even five.
Yeah.
But I mean, what was it, how is it different to when you started 15 years
Yeah,
ago?
no, that's a great question. I mean, so when I joined Triodos Bank all those years ago, I mean, people just thought it was a bit of an odd concept, and so this idea that there would be a bank that would be so selective in a sense about who it lends its money to, people just found it very, yeah, just a bit eccentric, I guess. And I guess that's probably been the biggest change is whereas 15, 20 years ago we were an outlier, now the mainstream is really starting to converge with what we do. And so this notion really that whatever any of us do with our money, it all has an impact. So that's kind of the fundamental thing is where we spend our money has an impact, where we save our money, where we invest it, and more of us are choosing to do whatever we can to try to make sure that that impact is a positive one as opposed to to a negative one. So I would really say it's really, I think the mainstream has caught up with us.
Yeah, it feels for me that people that are really committed to a sustainable or a conscious consumer lifestyle, that finance is kind of that
Mm.
last frontier for that. So it has been really interesting in terms of the interest and the growth. But how has that translated into kind of customers for you? Have you seen a big kind of growth in your customer base over the last few years?
Yes, absolutely. I mean, there've been a number of inflection points, if you like. I mean, 2008 and the last kind of big banking crisis. I think that was really the first time that for a lot of people, having some high profile bank failures that really came as a shock to people. And what that meant is that people were all of a sudden wondering, ooh, what is my bank doing with my money? Because I do want to make sure that when I need it, it's there. And I also want to make sure that my bank is lending money to the real economy, to real businesses and to things that I believe in. And so I would say that kind of 2008 really saw that first kind of inflection for growth in terms of us gaining a lot more customers coming to us. And then whilst we've offered current accounts to businesses for a long time, to organizations, we only made our current account available to personal customers. I think it was 3 years ago now, and so again, that's kind of driven a whole another level of growth because previously you could only have savings with us, whereas now that people can also do their everyday banking, that makes a big difference. And I mean, going back to your first question about what's changed, I think for consumers who care about these things, it's just gotten easier. So that's a real positive, because if you think maybe of your own journey in this field, going back even 8 years, it was a lot harder to find information, to have choice. Whereas now, there is a lot more choice in the market, and it's a lot more straightforward for people to make these positive investing, saving, banking decisions than it was before.
So can you give us some examples of what makes an ethical bank different to the others? You know, what is it that Triodos can offer customers that other banks aren't because they don't have such strong ethical policies?
Yeah. So a lot of people will first think of our lending criteria, but actually the first thing that I think really makes us different is that we tell you what we do with your money. And that, to me, that transparency is so fundamental to you as our customer, as a consumer, to just be able to know what an organization like ours, where we are lending your money. And we tell you that. So you can go on our website, or if you bank with us, it's even integrated into your mobile app. And you can put in your postcode of where you live, where you work, and you'll have examples of lots of the organizations that we've lent money to. So I think that transparency is really important because it just means that you know exactly where your funds are going and what they are being used for. Combined with that, we have very clear criteria. So we have very basic minimum standards. So those are the things that we absolutely do not do and would not lend to. But we go well above and beyond that because we know that our customers want to lend money to organizations, to projects, to businesses that are really kind of proactively improving the environment, encouraging organic farming, for example, small-scale renewable energy, helping with the development of, electric coaches, for example. I mean, Ember is a Scottish company that we've recently lent to that's running the first electric coach up in Scotland. We've recently lent to a Bristol-based online platform called Love to Ride, which is encouraging people to take up more cycling, And so I think it's really that combination of the transparency and then knowing that we are proactively going after and looking for companies who are having this positive impact. And then the last plank is that we try to run ourselves in a very responsible and sustainable manner. And one of the ways that we do that is we've gone through the B Corp certification process. So again, that can give our customers and our kind of stakeholders that, that confidence that we as an organization are also really trying to live up, to our own standards and run ourselves as sustainably as we can.
Yeah. So can you just give some examples? You gave us some kind of positive examples there of organisations and projects that you support. Can you give us just a couple of examples of things that you absolutely don't support, those minimum standards that you mentioned?
Yeah, so very, very basic things in a sense that wouldn't come as a surprise to someone who knows us. We don't lend to fossil fuel companies, for example. Any intensive farming, would also be a no-no for us, as well as very basic things like, labor standards, arms, gambling, those are kind of what we call the very minimum standards. But then above and beyond that, as I said, things like intensive agriculture, fossil fuels, But we really go beyond that because, in a sense, there are lots of businesses in our economy that are kind of neutral, if you know what I mean. They're not actively doing harm, but they're also not actively contributing. And we're actually looking for those organizations and wanting to lend the funds that people entrust with us to those organizations that are really making a positive impact. And so, that might be a specialist school that's looking after people with a learning disability. That's a project that we recently worked on, Paces Sheffield, and we've helped them to relocate their special needs school. So it's those kinds of organizations that we're looking to lend to. And then we're also really focused on the transition. We all know that, with the climate emergency, there are a lot of, whether it be our own lifestyle changes that we need to make, or the way that companies are run, or the way products are made, that we need to help to make more sustainable. And so we are also looking to see how we can support businesses in that transition that they need to make in order to really lessen the impact that they're having on the planet.
Yeah. Okay, so just finally on the kind of the personal account bit, I mean, how easy is it for people to switch, and how long does that take?
Yeah, so there's a switch guarantee which the government introduced in conjunction with the banking industry a number of years ago, and so that really makes it quite easy for people to switch bank accounts now. So it's kind of this 7-day guarantee where all of your direct debits, all of your automated payments are actually transferred from your old bank to your new bank. So switching bank accounts is a lot easier than it used to be, and so we are seeing now more movement in that regard. We're also aiming to make opening a bank account as straightforward as we can. So in the kind of very short term, in the next few weeks or in the next month, we're going to be introducing kind of a mobile only onboarding where you'll be able to hopefully, kind of go through all of the steps just from your mobile phone, from the app. And we're always balancing that against, of course, making sure that we fulfill all of our obligations, around knowing who our customers are, and really, trying to really stay alert of instances of fraud. So there's always that balance of, we as a bank, we obviously need to go through all these steps, but we are working really, really hard to try to make the processes as straightforward as possible. And a lot of people, are taking us up on it, which is really great to see. I mean, the people who are opening accounts with us, it's really coming from word of mouth, so recommendations from friends and family and co-workers, and that's been really good to see.
Yeah, no, it's great. I love the idea of the app and really simplifying that account opening process. I think a lot of people will really value that. So great. Okay, so I want to talk a bit more about the crowdfunding platform that you have. So this is a platform that you've created to help ordinary people invest directly into projects and organisations doing good stuff. Is this usual for a bank? Is this a common type of platform? Where did it come from?
Yeah, no, it is quite unusual. I mean, we were the first, and I think we're probably still only the UK bank that has its own crowdfunding platform. And it grew out of our corporate finance team, which we've had in the UK for over 15 years, where we advise and help social enterprises, charities, any kind of, impact-driven business that needs to access investment in order to grow. And we can help them find that capital. So that was work that when I joined the bank all those years ago, we were already doing, but we were doing in a very analog way, if you like. And so really our investment crowdfunding platform is just an easier way for prospective investors to find these investment opportunities that we're structuring with those organizations that need capital to grow. Because sometimes the bank loan is the right solution for an organization, but there are a lot of companies out there who need more money than what they could borrow from a bank, or it might be that they don't own their building, they don't have kind of the traditional security that a bank would require, and we can help them to find investors directly. So that is what our crowdfunding platform is doing.
Yeah, that's great. A lot of people are quite nervous about investing, especially, of course, first-time investors, and they don't really know where to look or, whether it's right for them. I mean, what would you say to people that are starting out on their journey to kind of, just to consider investing as an option for them? I mean, why should people consider it?
Yeah, no, that's again a really, really good question. And I know that in Britain, traditionally, we are a nation of savers as opposed to investors. And so investing doesn't come naturally to a lot of us. I think it's really about, trying to educate oneself. And I guess that is kind of the downside, is that, a lot of the onus is put on us to try to figure out the landscape. there's lots of different things that we invest for, and I think most of us are already investors, even if we don't realize it. So most of us, especially now that there's automatic enrollment for pensions, have a pension, and that's really for a lot of people kind of their first foray into investing. But it's something which tends to be really passive, that we don't tend to engage with that much, because it's either done for us, and it's done through a fund management company, and it all feels kind of very remote. So I think it's quite important for people to educate themselves around that. I think what investment crowdfunding enables people to do is it feels a lot more concrete, and it's something that you can do with a very small amount of money as a way to learn. So our crowdfunding platform, you can invest from £50. It's important for people to understand it is an investment. It comes with risk. It's not the same thing as putting money in a savings account. But what you get with this direct investing is that you get that direct connection of choosing the company, the project that you want to invest in, reading about them, and then making kind of your own judgment as to, yes, this is what I want my £50, £100 to go towards. Whereas I think with pensions and very long-term kind of investment that's managed for you, it just really feels out there and not something you have much control over. I think it's important for people to understand that really they need both. We need to be, actively looking at our pensions, making use of ISAs. But this direct investing in crowdfunding platforms, it really just enables people to kind of dip their toe in and start to understand, what comes with investing and what kind of decisions you have to make.
You mentioned that it comes with risk, which it does. Mm-hmm. How do you measure and communicate the risk of the different projects? Are there sort of different levels of risk for each of the projects? And what has the kind of overall sort of success rate of the organisations mm-hmm. and the projects been, if you know that?
Yeah. So again, with direct investing, it's only going to be appropriate for people who are comfortable making their own decisions. So that's one of the first things that we try to convey to people who come to our platform. And one of the first steps that they have to do, which is part of the regulatory environment, but which is very sensible, is go through a questionnaire, which will ask a series of questions. And that's really to make sure that people who are going to browse and look at these investment opportunities understand that it's different from depositing money in a bank account, the capital is not guaranteed, and that the rates of return that are expected aren't guaranteed either. And also understanding that again, unlike a bank account or a savings account, those investments are usually tied up for the whole period of the investment. So it's really important for people to understand that you shouldn't be putting money in that you may need to access during the term. So that's really kind of the overarching framework, if you like. It's just making sure that before people even consider the individual investment opportunities, they understand what those investments are all about. And then what we try really hard to balance, and I think we get the balance right, but we're always open to further feedback, is explaining the investment opportunities in a way that gives enough information to you as a prospective investor to make a decision, whilst not making it so complicated that you're putting risk warnings everywhere and that you actually can't make a decision. And that is really the art, if you like, of what we try to do. Is we do a lot of work in our team. We spend months working with these companies. Unlike some other platforms, we just don't take companies' business plans and then promote it. We actually work hand in glove with them for, anywhere from 4 months up to sometimes a year and a half, getting them ready to where, we feel like they can raise the capital. And then we try to convey that information in a way that's really accessible and digestible. And we do point out the risks of, of each investment, how long an organization has been set up, what they're going to do with the money, how proven their track record is, and that kind of thing, so that people can make their decision.
Yeah. And just in terms of the returns when projects do go well, which I'm sure is most of them, but just in terms of the returns, is it set as kind of a fixed amount, or does it depend on how well the organisation does? How is that set?
So a lot of the organisations that raise capital through us choose to do it through a bond, and a bond is basically a loan from a group of people, and so that will come with a fixed rate of interest, which will be explained at the outset. And the rate of interest might be anywhere from, say, typically 4 to 6% per year, that investors will be able to expect for the life of the bond, which might be, again, it depends, it might be anywhere from 6 to 7 years, upwards to 15 years if it's a renewable energy project. Those tend to be the longest ones. We do also raise share capital, so that's actually when you become a part owner in a business. And we've recently closed a share offer for a bamboo nappy company. And for something like that, the return, we can't tell you what that return might be, because it'll very much depend on the success of the business and when that company will be able to start paying dividends. So for investors who want kind of more, more of an idea of what the returns were going to be, bond investments tend to be more suitable. Whereas for people who, who can take more risk with their investment, that's where investing in companies and doing it through shares can be appropriate.
So do you want to tell us a bit about some of the projects that are run there, some of the organisations? So some that you've got that are really great, and also, maybe some that you'd like to see more of on there.
Yeah, absolutely. So we've done, I guess I'm trying to think, our projects kind of fall, I guess, in maybe 3 different, types of investment opportunities. So renewables is one which our investors really, really like. They like because, whilst again, nothing's ever guaranteed, the returns are very predictable. So if you have a solar farm or a hydro project or a wind farm, it's quite straightforward to kind of figure out what the returns are going to be over how long. And so our investors really like investing in renewable energy projects, both for that kind of certainty, but also for the green impact. And the ones that we particularly enjoy working with are those that are owned by a local community, where there's also part of the income that's being generated is actually set aside for community projects. We also have had a number of charities that we've helped to raise investment capital for, and that can be for different reasons. I mentioned earlier Paces Sheffield, which is a special needs school, and they needed to relocate because where they've been working out of was just a really old building, not fit for purpose, and they took on a leasehold that needs substantial refurbishment in order to turn it into a special needs school with all of the adaptations that you can imagine might be required around, lifts and specialist classrooms and things like that. And so we were really pleased to work with them, because through the money that we've been able to raise and that's been invested, they are going to be able to take on more pupils. So that means that, children are going to be able to access this specialist education much closer to home, whereas a lot of them were having to travel very far, or just were not getting, the provision that they needed. And then finally, we've got another opportunity coming up, which we're also really excited about, because it's around conservation of the environment and rewilding. So this is a charity up in Scotland, and they are raising money for their conservation work, but also specifically to go towards a visitor centre. And that visitor centre on their estate is really going to help them generate a more sustainable income stream for all the work that they do around tree planting and reintroducing, for example, red squirrels and different species up in Scotland. And we know that conservation of the environment is something that a lot of our investors are really, really interested in. So really anything around the environment, around, you know, reduction in plastic use, renewable energy, as well as the social issues, tend to resonate really well with our investors.
Yeah. Oh, I love the sound of that rewilding project. So we need much more of that, don't we?
Yeah.
Okay. So, all right. So my last two questions now. So the first one is, if I am part of a community group of some sort, and we've got an idea for a local project,
Yeah.
how would we start a conversation with you about maybe having our project put on the platform?
Yeah. So the most straightforward thing to do is to email us at crowdfunding@triodos.co.uk, and we're always happy to have conversations with people. We tend to work with organizations that are already established and kind of know how much they need to raise and can show us a plan for how they are going to repay it. So we don't tend to advise very early stage organizations, but we're always very happy to have a conversation, and we'll always try to point those in the right direction.
Brilliant. And okay, my final question is just, do you have any more sort of general tips for people that want to make sure that they're using their money for good?
Yeah, absolutely. I mean, I think, and this is speaking from my own experience and very personally, I think finances, even for me, you know, when it comes to look at my personal finances, you just kind of go, ugh, you know, it's this real, it feels like such an energy drain. And so I think my top tip would be, pick something small, one concrete change that you can make. Because the challenge is, once you start looking at finances, it just, you know, you start thinking about everything, and then you get paralyzed. And so even just choosing one small thing, whether it be, you know, finding out how your pension is invested, or deciding that you're going to have a look at our current account and consider moving that, or having a look at making, you know, one small direct investment in a social enterprise, because that direct connection, I think, will then energize you to then take the next step and to do the next thing. So I would say choose one small thing that you think is achievable, and try to get that done in the next, say, 2 months, and then that really will start to kind of encourage you, I think, to take the next step after that.